Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive right in, take a look, see what people are sharing. If you want to follow me, it's at @Finance, and if you want to join our community, finding-value.com is where I dive deeper into all these sectors, looking for potential investment opportunities and sharing them with everyone in the community. We do have a discount coupon code special going on. It's special is that code. It's a 50% off the first month only on a monthly membership, and a larger discount on the yearly membership for anyone who wants to either switch from a monthly to a yearly or go directly to the yearly membership. So we've got North Star here. It says Google is plunging into a bear market versus gold. Well, a lot of stuff's plunging against gold, to be honest. Google, the S&P 500, the NASDAQ, everything. What does it mean? Why is it doing it? And this is something that we use to measure relative strength and weakness. Last bull market, if you were to go back into time, before this chart to the left, you can't see it, but if we were to do Google versus gold, let's do it. So here's Google divided by, we'll do XAU USD. So if we look at Google versus gold, and it doesn't go all the way back, that's why, but it's been pulling back quite vigorously versus it. But if you go back in history, what you'll see, here we can use this one maybe. So there's history there. It doesn't go all the way back. But anyway, when gold outperforms Google or when gold outperforms the NASDAQ, it means that we've entered a different market condition. The market condition that we're entering could very well be conducive to commodities and precious metals outperforming financial assets. At these peaks, generally you get very expensive financial assets, very cheap commodity prices. And then the cycle goes up. So people move into financial assets and then they move out of financial assets when it goes down. And that's the money rotating from one sector to other sectors. Financial assets into hard assets. And right now that is in progress. It is starting to get juicy, is what I'll say. Copper to gold, fake out or real, higher copper to gold ratio equals higher global growth. Lower copper to gold ratio equals lower global growth. So what we've got here is this ratio going up and down. We have a potential turn here upwards where copper could start to outperform gold. What that means is that we are entering a different market condition. And if copper starts to outperform gold, which it could, we have higher global growth. That could be China, it could be America, it could be the manufacturing productive capacity increasing, which then increases copper demand, and then gold demand will lower because you're entering a different market condition perhaps. When we get these outperformances of copper, this is generally where we see a massive outperformance of oil. Oil starts to really kick up. So when copper starts to outperform gold, a lot of the times you'll see oil start to really rip. We're not there yet. As you can see, oil is still low and it is still chopping sideways. But generally, right before the big moves, you can see a false breakdown potentially in oil, maybe, and then we rip to the upside. So this is all kind of playing out here. And we use this as further information and data to understand the markets better, of how money is shifting and rotating in the markets, to give us more information and more confidence in what is occurring for the market conditions. Master Thomas says the U.S. Department of Energy estimates that data centers could consume up to 12% of total U.S. electricity by 2028 And that is up from just 4.4% in 2023. And the first thing that pops into my mind is natural gas demand. And I know it's coming from a uranium guy because he's got nuclear, SMR, uranium. Out in the future, I'm sure uranium is going to have to kick way up. There's no doubts about that for me. I think in the short term, it's all nat gas. It's all nat gas demand. So more natural gas demand is coming. Chris Martinson. I like Chris. I used to listen to him a long time ago. So, and I still listen to him every once in a while. So it says, this is the biggest news of the century. Even if magic money is only 5% or maybe 10%, this means the entire premise of money and banking are a fraud at the conceptual level. If money is being spent without it coming from a message-settled banking account, it means the entire system of banking is an overt fraud. This is explosive, truly. Maybe this explains why big money has been stampeding into gold and silver. That fits the fact pattern. So what is he talking about? So this is Elon Musk, and he says, Elon Musk says they found so far there are likely more 14 magic money computers in the federal government that send money out. Before doing that, they make money out of thin air. Yes. So what does one do to protect themselves against this design of our current system? The design of fiat currency that is not backed by anything allows this type of fraud to occur. So what I do is I take the dollars and put it into something that will retain or increase its purchasing power or value. That could be stocks, equities. It could be in a house. It could be buying hard assets. That's what you do in order to preserve purchasing power. You can't store it in something that can be created so easily and out of nothing. So money gets printed out of thin air. That is a big problem. And we are probably going to see the devaluation of all of these different currencies. They're all printed out of thin air. To make things and matters worse, in monetary bank lending, when banks create loans, that creates money out of thin air as well. That is how the money system expands its money supply. That's where inflation comes from. So the fiscal side is this money out of thin air on the government and the Federal Reserve doing it. That's fiscal spending. That's money out of thin air from fiscal side. The monetary side creates money when loans are created. Brand new loans, poof, come into existence. That's the reserve banking system. They keep a fraction of the reserves back, and now they basically don't have to keep reserves. So they're just basically creating money whenever they create a loan out of thin air. There has been people who have tried to go to the justice system to say that the banks did not put up appropriate collateral when people took loans out. But the problem is the system itself is all corrupt, because from an ethical, logical standpoint, that is true. Because if you only have a fractional reserve banking system, it only means that you have a fraction of the reserves in the system, which means that all of the loans that have been created are not backed by that money. So the banking system created something out of nothing, hence the fractional reserve. So that's where the whole system kind of breaks apart, and it starts and ends with the money. If you have crap fiat money, that is where the problem begins and will also end, is in that currency money system. Metals versus SPX. I was kind of just looking. This is silver versus the S&P 500. It's a big double bottom, if you guys can see that. Big double bottom. Here is platinum versus SPX. I put this on log, another double bottom. It's coming, right? I mean, these are all going to turn up at the same time. What I would focus on is just the sheer cheapness that we are at right now in relationship to financial assets. If we get back to this level like 2.6 and we're at 0.2, what that means is we can go up well over 10x against the S&P 500. Platinum can. Now, here's another thing to think about. If they continue to print money, that money printer goes burr in the background, or these magic money machines that he was talking about, the S&P doesn't really even need to fall that much. But platinum could do an absolute insane move to the upside. Same with gold. So we could see numbers that are ludicrous. People would say there's no possible way that platinum could be 40, 50, $100,000 an ounce. Same with gold being 20, 30, $40,000 an ounce. I'm not projecting those numbers. What I'm simply stating is our currency is not in a good spot. And when people figure this out, they're not going to want the currency and they're not going to want the bonds. So what you're going to see is you're going to see the bond market sell off, which we're seeing, and then you're going to see a whole bunch of people run at precious metals, kind of like gold's going vertical right now. Well, that's going to intensify. And people are going to start to look at gold and say, you know what, gold's kind of expensive. It's, $3,000 something, $4,000 an ounce. And they're going to say, well, platinum's only $1,000 an ounce. Then all of a sudden, preferences will start to shift. People are going to start buying silver and platinum and palladium just to preserve purchasing power. And this is stating how cheap it is in relationship to financial assets. Here's another problem. If money starts to rotate out of financial assets, it has to go somewhere. If the bond market isn't a viable option, and people don't want to keep their money in the currency because it's declining, well, then where does it go? That's the question you should be asking. Here's gold versus the SPX, another big double bottom. And if you zoom in on the right-hand side, it's breaking out. The rotation is starting to occur. We're at the beginning stages. And if you've seen The Big Short, there's a couple of things that they say. You can be first. So really what that means is you want to panic buy first. You could be smarter. And I can't remember the last one. Is it work harder, smarter, and be first? Or no, it's cheat. You can cheat or do something unethical. I'm not doing anything unethical. I don't know how to really even do that. But what I do is I try to be first. And to be first, you want to get in here when it's real cheap. So that's what I've done. That is what I've done. Coming down, energy versus the S&P 500. So I'm kind of going through these ratios. A lot of people are kind of writing off energy. This chart looks absolutely excellent for energy. I mean, absolutely excellent. Why do I say that? Well, you can easily see a top here. This is the oil commodity bull market back here coming up from 99 to 2008. We peaked. We have a 3-hump consolidation peak. We broke to the downside, and this is the S&P 500 bull market. It bottomed in 2020 right here, and we bottomed. We have a shoulder, a head, and a shoulder. That's a bottoming pattern of an inverted shoulder, head, shoulder. We broke out, and then we've consolidated in a falling wedge at the beginning of this bull market. But look at what's happening right on the right-hand side there. We're starting to break out to the upside. And this is XLE, which is the energy stocks versus the S&P 500. So we're just starting to break out here. What does this mean? Oil hasn't even moved, guys. Oil is still down, but yet people are positioning in XLE. What does that say? What does that mean? Means we're about to get moving. Means the oil price will probably go higher. Probably pretty soon. Now, why am I saying probably? Because no one knows with 100% certainty. But what we do know is that people are positioning in XLE over SPX. That I think we're going to see a resumed bull market here in commodity equities across the board. Uranium, oil, precious metals, a whole bunch of other things. Now here's the miners. The miners are the precious metals mining companies versus the S&P 500. I said it's just the beginning. Just the beginning. So what does this look like? Breakout. GDXJ is breaking out against the S&P 500. Interesting. Interesting, this money flow. This is just beginning, and it's going to go up a lot more. We've got SILJ versus SPX. It still hasn't broken out yet. We're still in the downtrend. It's still early. We've got SIL, which is the larger silver companies, versus SPX. It's breaking out. So what do you think SILJ is going to do if SIL is breaking out? It's probably going to break out. And then we've got GDX versus the SPX. That's breaking out. we're just at the beginning of this breakout here, guys. We could have a very big move. Like, so here's the thing. On the website, we've been buying these companies down here. Why? Let me explain something really quick for everyone. These are ratios, and ratios typically break out after the strong companies have already broken out. So this is the average of this ETF breaking out, right? Because an ETF is a group of companies that are averaged together to break out against the S&P 500, which is another average of a bunch of companies. If you're going to get the strongest companies, they generally create patterns before this breakout. So you have to be earlier than this. On the website, we've been buying these companies already for a while. Now, there are other companies that are lagging. Hence, the average is breaking out. So you've got some really, really strong ones that front run it. And then there's some that lag. And it doesn't mean that if something lags that it's bad. It could still be very good. So I'm going around and I'm researching and looking at low risk opportunities for buying companies that are gold and silver mining companies. And we were just buying some this past week or two. This is the opportunity here. The average is breaking out. Now we need to go search and find if there's any laggards that we really like. And there is a few that I have found. So this is all starting to break out, all of these. This is also going to be a leader for all of commodities breaking out. Energy is going to break out. Uranium is going to break out. So this is where you want to look at one spot. You gain confidence that the commodity bull market is coming, and then you start to look at other sectors that are down and get ideas and maybe start taking positions in things that could potentially be at the bottom of the bottom. But it requires emotional strength and patience if you're going to try to play the whole bull market and get a bottom to top move. I am doing that. And if you guys want to play along in the, join the website, follow along what I'm doing, and you can see how I'm doing it. You can also see the companies that I'm selecting. I think uranium, there's some uranium companies that people are sleeping on, in my opinion. But they are high risk. They are very high risk. And the way that you mitigate risk is through position sizing. You want to position size smaller in them, in my opinion. Miners versus the metal. So we're kind of looking, we're diving in, we're saying, okay, the miners versus the S&P 500, here's miners versus the metal, and we're still bottoming out against the metal itself. SILJ is super cheap entry point here, very low, with a ton of runway. It hasn't really run yet, so this looks really good. We've got GDXJ versus gold, super cheap. We're still very low. We have a long way to run here, guys. So when you look at these charts and the ratio charts, you want to see the runway ahead of us. Historically, if we get back to 2011 peak, we have a really long way to go, which means that we could see a massive move out of the junior companies here. It's a little bit further along GDX. We're starting to break this downtrend here. I didn't draw it in there, but that's also incredibly low. And then SIL versus silver, we've got a basing pattern. We've broken the downtrend, we're basing out, and it's ready to rip at any second here. These are all great opportunities. And I'm sure if you dive into the individual companies, you could get some absolute winners. Now, let me describe some here real quick. These are all ETFs that I'm showing you. The reason I'm showing ETFs is just for the fact that you can see the general market doing something. If you pick good individual companies, you will absolutely destroy the returns compared to these ETFs. But you have to be very selective and you have to do your research and find those companies. That's exactly what I do. Again, on the website, is I research the companies. Now, some of the companies that we are in right now are up hundreds of percents off their bottoms. And we purchased pretty dang close to the bottom. We recently also purchased another one that had a beautiful setup against silver, falling into a corner. There's two companies, and now they are breaking out. They look very good. They're up 20, 30, 40, 50% from that purchase corner location. Coming down, housing starts. Housing starts are important to watch because this is another inflation driver. Look what's happening. We're starting to break out of this little consolidation to the upside in housing starts. If we zoom in, there's the breakout. There's the consolidation and then the breakout. This here is also a driver of the economy. It's also a driver of inflation. And then also we see a huge correlation between oil and this housing starts. Credit creation is inflation. Inflation in the system creates demand for oil. This is the number one commodity. Coming down, housing permits, another one that we want to see. So U.S. housing permits by category. You can see that we are up recently in single-family homes. Multifamily homes are down for permits. Just an FYI. Much like the national trend, the job market in the key counties that drive Permian production had already begun to soften before the current administration took office and prior to OPEC's recent decisions. This is your growth percentage. Do you see it declining here? We are down in growth. If this is what they call the twilight here, this is where things could get interesting. And you can also see Permian County's unemployment rate is the line left. So unemployment rate declining output. But we're seeing declining output even with declining unemployment. So this could get real interesting. Because if oil is too low and they start to cut jobs, perhaps the output declines with it. If demand is going up and the supply of shale oil goes down, what do you think the price will do? Going to go back up. And this is one of two, so let's check out two of two. The prior chart only shows data monthly as of January. Therefore, I also keep my eyes on weekly unemployment insurance claims in these critical counties for U.S. energy production. The trend has been uppish. The latest data point here is as of March. So this is Permian and Eagle Ford counties' weekly unemployment insurance claims coming on up. What that means is we could see lower supply of oil. Here's XAU versus Bitcoin. Gold is trying to break out from its decade-long downtrend versus Bitcoin here. What does that mean? All of these things are interconnected. Everything I show you, all pieces of information are nodes in an interconnected system. So when you look at things, what they tell you is information about the market from the inside of the market out. What does that mean? So it's people inside the market that are trading with each other, taking bets, shifting money around in the system. And what we're doing is we're tracking how money is shifting and being invested. That's what the ratios are tracking. As certain sectors outperform other sectors, it's telling you about market conditions. Financial assets, which I include crypto in, means that people are starting to favor hard assets over financial assets. And I think if this breaks to the upside, that's exactly what we get. We get a commodity bull market. The NASDAQ goes down or sideways. Same with the S&P 500, same with crypto. And we could see its potential. We could potentially see a very big bear market in cryptocurrency. Now, here's another thing. This all is interconnected. So keep this all in the forefront of your mind. If people are not buying crypto, if people are not buying the NASDAQ, if people are not buying the S&P 500, and if people are not buying bonds, where does that money go? That's called the capital rotation into hard assets. And hard assets are a fraction of the size of these markets. So if a whole bunch of money wants to shift into very small markets, in order to absorb that money, price has to move a very long way to absorb that type of capital. It's coming though. The lag 7, I love it. I had to share this just because he had the lag 7. It's breaking down from the consolidation. Here it is breaking down. So people don't want financial assets. The markets are shifting. M2 money supply versus platinum. The ratio of M2 money supply and platinum prices look poised for a breakdown, which means platinum is going to outperform the M2 money supply. I anticipate platinum will begin to outperform the money supply going forward. I agree. It's all setting up here. And when these things start to shift, these guys that are smaller, that have very small markets, they're going to rip. They are going to rip. I'm so excited for it. Housing permits tell an important story. They've returned to 2019 levels, just like new home sales. Permits peaked 3 years ago. This was really low interest rates here and it peaked. Notice that the oil markets did the same thing in this rough time frame. 2022 came on down with permits and housing starts and inflation. Bullish trend says here's good data today. U.S. manufacturing output month over month actual is 0.9%. That's pretty high. Forecast 0.3, previous minus 0.1. Positive data's real economy probably bottoming. This also, I think, is why copper is shooting higher. It's this data here. GDX divided by the S&P 500, another one. The major gold mining ETF is breaking out versus the broader markets. Rotation is incoming to the miners and the entire commodity sector as well. Completely agree. We're game on here, guys. It's game on now. This is game time. We're not sitting on our hands, smelling our own farts, drinking wine. This is game time. This is when I think of this, I think of deploying capital. I think of finding the value in the market in these commodity sectors and deploying capital to get in there before money really starts to seek alternatives to things that are underperforming. As markets go down, it's going to force other investors to go somewhere else. They're going to FOMO buy. What that's called? It's called seeking returns. So they're going to go out. They're going to seek returns because what they're in isn't working, and they're going to be forced to go into something else. That's the capital rotation. If you guys understand that. And what we've been doing on the website here since about 2022, I've been looking at all these companies bottoming. It's like pick it up, 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 and then we are going to get a launch. It requires emotional stability, requires patience. As these things rotate, it's going to get real fun. You're going to see account values go up dramatically. So that positioning of finding the best companies in the best sectors with the most leverage and buying it at the cheapest prices over the past year or two is going to pay off handsomely. It's going to be such a fun ride, and I'm glad that I can experience this with everyone that is in that community there. I'm really excited for it. Attention Bitcoiners, you guys are running out of time. Most of you are too young and inexperienced to recognize what the markets are telling you. The Bitcoin bubble has popped. Real gold is in and digital fool's gold is out. You fail to recognize this shift at your own peril. Well, I'm just reading that. I'm not trying to go against Bitcoin. I don't really care, but I do think there is some merit to this. I do think that if we get a gold breakout against Bitcoin up here, that things are going to get pretty ugly for Bitcoin. I do agree with that. I've seen comments suggesting a few months of outperformance versus U.S. equities is meaningless. After 12 years of U.S. dominance, a liftoff like this is more likely an important shift. Pulling back to a longer view can be very helpful to recognize a structural shift, and this is a structural shift. Totally agree. And the dollar's driving it. And this is the breakout. This is MSCI Eurozone ETF. Now, I'm not investing in the Eurozone. These are all things that are tied to the cycle. What I'm doing is I want the most leverage to it. I'm going to play this with some money in very highly leveraged companies that are going to provide 5 to 100x my money. 5x to 100x. I know that sounds ludicrous. It's not, though. And then I take a long viewpoint. I'm going to buy the bottoms out of all of them, and I'm just going to hold. And right now, we have a gift. We have a gift in all these different sectors where things are still bottoming. And I'm just going to start picking them off left and right. I'm going to do it right in front of everybody on the website. I'm going to do it right in front of everyone. And I will tell you guys what I'm doing. I can show you what I'm doing, and I'm going to log it and document it all right in front of you. Feb housing starts, single-family starts are up 92,000, best month since last February. Spring will be the moment of truth for the industry, but for now, this is an expansionary number, which is good. Hard to argue the growth scare is anything more than a scare. No recession imminent. See? I like it. And that's housing driving this boat. Impressive, says Tavi. It says, despite the S&P 500 being down year to date, gold miners are now up 33%. Markets are undergoing a major rotation, in my view, with capital flowing into hard assets-based business. Completely agree. He's 100% right. He's been right. So S&P index index is down while gold miners are starting to really rip here. This is GDX ETF. And if you're looking at some of these smaller companies, some of them have just been ripping hard. I mean, they've done like 33%. So I think I saw one that was up 18% today. Freight futures AM update: dry bulk flat, slightly down, and then tankers up 3% and Suezmax down 1. Cycle bottom, rotation continues, tech rolling over, commodities rolling up. That's the cycle. That is the cycle. Let's get Grady in here. It says next leg up for this ratio chart below is now starting. Commodities started outperforming general equities 5 years ago. It's 2020 bottom. Since then, I managed to nail the chart turn below plus commodities bear market low back in 2020 in real time. Of course, have to try and do it next time around too, and that time is now. So here it goes, now calling the continuation of the up move for the chart below, i.e. the continued outperformance for commodities versus the stock market. Think the next leg up for this chart below is now starting. So that's CRB index versus Dow Jones, and the next leg up is now starting. False breakdown. This is the slingshot higher, and we're ready to rip here, guys. It'll be a big move. 60-year bullish falling wedge. This was just the up move here. That last commodity bull market with interest rates declining was just a small move. Same with the 70s. Now we've got a big falling wedge. If we can break out the top here, it's game over, guys. This is basically resource. It's going to be a large resource constrained world. And what is the value of a business that can't get its inputs? It's way lower than what it is today. This is I think you're going to almost have to have allocation to commodities and resources. Otherwise, everything else is, I think, it's going to struggle. Uranium miners made its 9-year bear market low back in March of 2020. Then uranium miners did 580% in its baby bull move. Many companies at the surface rose 7 to 10x. And now, after an expected and brutal yearly cycle decline, the sector now looks interesting again. Get ready for big up moves in many sectors here. Gold, silver, platinum, palladium, uranium, Bitcoin, everything. The purple expanding falling wedge pattern below has broken out and backtested. It's go time. Been posting this and other TSX Venture charts for quite a while now. The fact that this chart gets few likes still is a good thing, and it shows people can still not believe it. And at the same time, the 100 posts on XYZ gets people excited and active. It is like most have forgotten that it is real value one should be looking for, and not waste time on attention-seeking posts, especially for things that are given to happen but for years from it. This is probably because most look for instant gratification and are drawn to posts that offer the promise of metals going to the moon as of yesterday. Most have no patience and not enough knowledge to sort out what is true value and what is not. So here is the beginning breakout that we've got going on of the TSX Venture. This is looking fantastic, guys. We're going to get a big breakout here. It's going to be a very big move. 330% from top of this to measure target move. We still have good ways to move up to get to that big move. Coming back. Okay, I shouldn't have come back there. Coming down. Big bet on Brent rising toward $100 a barrel has been made. Yeah, probably be me. All these precious metals ratio charts are now breaking out. The global capital rotation into precious metals is not starting now, nor is it confirmed now. It started when these ratios charts below turned, which I posted on real time back. So basically, we're in this move, guys. And what we've got here is this is the Huey versus SOX breakout. It's going. We've got First Majestic versus NVIDIA breakout. It's going. Gold versus the SPX breakout. It's going. And then GDX versus SPY breakout, and it's moving. Everything is in motion. So this is looking real good for a potential commodity bull market that is basically we're in now. Jordan, he says, generalist money is going to start buying miners. GDX and GDXJ breaking out against the stock market. And this is, again, the potential bottoming patterns here that we got in a breakout. This is GDX versus S&P and GDX, that's also. So GDX and GDXJ. God, this is so good, guys. I've been saying gold 3,000, 3,300, silver 40, 45 next. And here we are breaking higher. Or silver. Looking fantastic. This one here, China just announced plans to vigorously boost consumption and expand domestic demand in all directions. Focus on raising incomes, stabilize the real estate and stock markets, and improve medical and pension services is what they're trying to do. It's going to be tough because they have a decline of demographics, decline in population. So the real estate market's going to be a tough one to stabilize, I think. This one here is, while banks call for $50, $60 oil, we're seeing $75 to $80 earlier this year. And we need at least that, says Amarita Sen. At these price levels, supplies are simply not going to rise. So we need higher prices. It's coming. It's coming, in her opinion. Here's XLE. It says the energy sector, XLE, is sitting right at a 4-month downtrend line. Can energy break above its downtrend line, or is it the fifth failed attempt around the corner? I think we're going to break higher. It looks good. And that's where we're going to end it, guys. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Special coupon code. Look for a midweek update that I just released on the website if you guys are interested. And I go over what I'm looking at, what my favorite companies are. But that's all I've got for today. We'll catch you next time. This is Finding Value.